The global polycrisis, how geopolitics is shaking the world economy. We are living in a global polycrisis, where multiple geopolitical risks are hitting the world economy at the same time. Tier 1. Active, hot, conflicts, immediate shocks. First, energy and food price spikes. The Russia-Ukraine war continues to keep energy prices high in Europe and makes global food inflation more persistent. Second, disrupted global shipping. Rising tensions in the Middle East have turned parts of the Red Sea into a no-go zone, increasing shipping times by up to 2 weeks and raising costs worldwide. Third, oil market volatility. Geopolitical interventions, like U.S. actions related to Venezuela, are adding a war premium to crude oil prices, making fuel costs unpredictable. Tier 2. Cold, economic wars, systemic slowdown. Next comes the Great Decoupling. The US-China tech war is splitting the world into two inefficient supply chains, increasing costs and slowing global growth. Then, de-dollarization efforts. BRICS plus nations are buying more gold and trading in local currencies to reduce dependence on the US dollar. And persistent inflation. Higher tariffs and trade barriers mean the era of ultra-cheap consumer goods is coming to an end. Tier 3. Silent risks, long-term destabilizers. One major risk is semiconductor concentration. Nearly 90% of advanced chips are made in Taiwan. Any conflict here could trigger a global economic collapse overnight. Another threat is soaring sovereign debt. Massive deficits in countries like the US, China, and France could cause a global financial freeze if investor confidence breaks. Finally, the rising cost of green transition. Resource nationalism in Africa and Latin America is making critical minerals for EVs and solar energy more expensive. Together, these risks show that the global economy is no longer facing one crisis, but many, all at once.